Have you ever looked around at the lake and thought, where in the world did all of these people get their money to buy these amazing new surf boats? Well, there's a good chance that they know about something that you may not, and we are going to talk about it. What's up, guys? This is Mitch from Boardco. Today, we are going to be talking about a topic that may sound intimidating at first, but it can be a real game changer if you are looking to get out on the water in 2025 and looking at new surf boats. We are going to be talking about boat financing, and particularly boat financing in the year 2025. So as I mentioned, if you've ever been wondering how people are able to afford these different boats and what different things such as boat financing options look like, you've come to the right place. We're going to talk about how boat financing compares to car loans, how they compare to mortgages, or if you've been thinking about upgrading to a dream boat but aren't sure how you're going to pay for it, we are going to talk about that today. By the end of this video, you're going to have a clear understanding of a few things. Number one, how boat financing works and how it's different from financing cars or homes. Number two, the current market conditions for boat loans in 2025, including interest rates, terms, and what banks are looking for. Number three, the factors that influence whether you qualify for a boat loan and how to position yourself to get the very best rates and terms. So sit back, relax, and let's dive into boat financing. So let's first start by comparing boat financing rates and terms and information with what you might be more familiar with, specifically talking about automotive and mortgage loans. So the first thing to talk about is the loan terms. So automotive terms are normally 5 to 7 year terms, and mortgages can be 15 to up to 30 years. Boats, and in this case, I'm talking specifically about new wake boats, can be financed many times up to 20 years on the term, or 240 months is another way to put it. So the reason why they can be financed on a term that is so much longer than an auto loan is because boats retain their value and depreciate much more slowly than automobiles. They don't depreciate as slowly as homes. They don't appreciate in value unless we're talking about back in 2020 with COVID, but they do depreciate at a very, very slow rate compared to other depreciable assets. This means that banks can extend loans out to 20 years on a boat and not have to worry about their collateral being greatly at risk. The next thing to talk about when it comes to boat loans versus car loans is interest rates. So because a boat is considered a luxury purchase, lenders view it as a little bit riskier than like an automotive loan. Let's face it, if you run into financial trouble, it's much more likely that you're going to prioritize payments and make it so you keep your car than it is that you keep your boat. As a result, boat loan interest rates tend to be slightly higher than what you end up seeing for car loans. Now, I know what you may be thinking. 20 years for a boat loan? That sounds absolutely crazy. Who is going to be paying on a boat for 20 years? But keep in mind that that's not actually how it works. The vast majority of boat loans are paid off in just a few years, whether it's that people pay off the entirety of the loan or whether that be that they trade it in or sell the boat or something like that. The average turnaround is roughly 4 to 5 years. So the vast majority of the time, people aren't signing up for an actual 20-year note. That said, when we're talking about boats and particularly higher end models, they hold their value extremely well. This means that they have a much slower depreciation and it helps justify those longer terms. It can also mean that the cost of ownership over time can be lower than what most people end up expecting, which is why you see plenty of high dollar boats at your local lake. A lot of these boat owners aren't necessarily making millions and millions of dollars. They're just financing them over a longer term with more manageable monthly payments, and the depreciation of the boat typically keeps up with those monthly payments, meaning they don't end up drastically underwater. Now that we've covered a few of the basics when it comes to boat loans, let's talk about key factors in qualifying for a boat loan and what you can expect when it comes to rates and terms. So when you apply for a boat loan, lenders will look at a handful of factors when going through and deciding, number one, if you're approved, but also what kind of rates and terms and conditions will be applied on that loan. The first thing that they're going to look at is the credit score. Now, this is a fairly obvious one. A higher credit score generally means better rates and terms. Because a boat is considered to be a luxury item, typically banks have a higher threshold for credit scores than what they do with an auto loan or with a home mortgage, because there's also no federally backed government program that's particularly protecting boat owners. Though that would be awesome, President Trump, if you're keeping anything in mind, this is a good thing to think about. So the second thing they end up looking at is debt to income ratio. Lenders want to see that you have sufficient income relative to your existing debts and liabilities. If your monthly debts are too high compared to your income, qualifying can become more challenging. Also, that debt to income ratio can impact the rate. If you have a higher debt to income ratio, you may not qualify for quite as much, or your rate may not be quite as good as if you have a lower debt to income ratio. Third thing is your credit history. Beyond just your score, lenders want to check how reliably you've handled past loans and credit lines, and in particular, if you've had any credit lines that are a higher dollar figure. If you're going to be taking out a boat loan that's, let's say, $300,000, and the largest loan you've ever had was a $4,000 auto loan from 5 years ago, that may be a little bit of a problem. Fourth up is loan to value. And what that means is that is how much you are borrowing relative to the boat's actual value. So lenders will assess a boat's value and then determine how much you are borrowing against that value, and that will impact both the rate as well as the term that you would get on that loan. Now, let's talk about the differences between new boat financing and used boat financing, because there are some definite differences between the two. First off, let's talk about new boats. So new boats often come with better rates and terms compared to used boats because of the way that they're valued. So lenders will typically value new boats based on MSRP or based on invoice pricing. And lenders can oftentimes feel more confident about the stable value of a new boat because they understand the condition and there aren't as many variable factors with that new boat as exist within the used boat world. Now, when it comes to used boats, they typically have slightly higher interest rates. And part of that is because the valuation is done using Blue Book values, and it can vary depending on a lot of different things, such as the equipment that the boat is equipped with, such as the condition of the boat, the number of hours, and things of that nature, which aren't something that banks necessarily factor in when it comes to their rates. They really kind of take a catch-all approach where they average it across used boats, and that makes it so the rates are a little bit higher than what you can end up seeing with a new boat. Now, an important takeaway here is that sometimes a new boat payment can actually be similar to a used boat payment because of the rate differences. Now, this can be true with late model used boats, but it can actually even be cheaper with older used boats because typically older ones don't necessarily qualify for the same terms. So what can happen is people will oftentimes compare a slightly cheaper used boat or a notably cheaper used older boat, that both of which will have a higher interest rate and potentially different terms versus a more expensive new boat. And sometimes they actually end up finding that the new boat is the same or close to, or even in some cases less expensive on a monthly basis compared to what they can get in the used market. We have this happen all the time where customers will come in, look at a boat that is 2 or 3 years old, compare it to a brand new one, and it turns out that their payment on the brand new model of the exact same boat is the same or sometimes even less than what they experienced with a used boat. What this comes down to is just simply the terms and also the interest rates that you get available. Oftentimes with new boats, people end up spending less in interest payments over the life of the loan than what they will spend on a used boat, and it ends up kind of equaling out the payment when you're looking between the two options. Next up, let's specifically talk about rates, terms, and cash down and what those specifically look like on boats. So as we mentioned, it's not uncommon to see 20-year terms on many popular surf boats, and the reason is their values hold up over time. But here's a good rule of thumb when you're looking at financing and how the payments are going to structure. Typically, it's common for you to pay roughly around $7 a month for every $1,000 that you finance. What that means is if you're going to finance $100,000, you can expect roughly $700 a month payment on that boat. Now, of course, this depends on a lot of different things, such as the exact interest rate, what terms you're running, but it's a decent guideline if you're looking at a boat on a 20-year term note at an average interest rate, which for us here at Boardco right now is sitting at right around 7.5%. Now, depending on when you're watching this video or depending on what dealership or bank or that you work with, they may have different terms. They may have a higher interest rate. It's pretty uncommon that you get a lower interest rate. My guys are pretty good in that regard. So But that term of $7 per every $1,000 finance is a good rule of thumb for what you can expect. That also means that if you put more cash down, such as putting an additional $1,000 down on a boat, it's going to reduce your monthly payment by roughly $7 a month. Now that we're on the topic of cash down, let's talk about what's typically required for boat loans. So the most common scenario for boat loans is banks like to see between 10 and 20% down on a loan. There are some situations where you can have less down. There's some that they were going to require more, but the most common one is typically between 10 and 20%. So by having that equity in the boat, it also makes it so that your loan to value ratio is better. Now that 10 to 20% cash down number is what the banks typically require to do the loan. However, you may want to adjust your cash down, not just to make it so that you qualify, but also to ensure that you get the best possible rate. As I mentioned before, loan to value ratio is an important factor that banks look at. And if you have an expert financial assistant that's helping you and working with you through the process, they can tell you the exact amount that you're going to want to put down on the loan in order to ensure that you get the ideal possible rate. What you don't want to do is be in a situation where you're putting 11% down on a boat, and if you put 12% down, it's going to drop your interest rate another point. So what that means is that oftentimes people will choose the amount that they're putting down based on what they need to qualify. People will also choose the amount that they put down to ensure that they get the best possible rate. Now, sometimes that may mean, hey, you'd have to put a much larger portion down and you may not want to do that. But if putting another $1,000 down on the boat can improve your interest rate and you end up getting that money back very quickly, that can be a well worth investment to be looking at. Now, I mentioned previously about how depreciation will typically keep up payments. If you're putting between 10 and 20% down on a boat, what we most commonly see after doing thousands and thousands of boat loans and having people want to trade their boats in is that most of the time on surf boats, if people are putting between 10 and 20% down, their payments will keep up with the depreciation of the boat, meaning that they won't have to shell out any additional dollars because they're sitting underwater when they want to trade that boat in or when they want to sell it. But one thing I wanted to hit on is how that down payment is going to equate to equity in your boat and depreciation. So the reason why banks will typically require at least 10% down is to ensure that you're on the right side of the loan, so you don't owe more than what your boat is worth. Because a boat will depreciate from the time that you buy it as new, but it's not like a car. So most cars will lose around 50% of their value in the first 3 to 4 years. A boat, on the other hand, will lose roughly 10 to 15% of its value the first year, just enough to where somebody would want to buy that versus buying a brand new one. And then it will most generally depreciate at roughly 5% a year every year after that, as long as you didn't just get a terrible deal on your boat. So that what we find is that is a typical structure that people end up with. And if they're putting between 10 and 20% down, after a couple of years, they're typically right set up and have additional equity in their boat. In fact, the vast majority of people that look to trade in their boat, whether it's 2 years, 4 years, 6 years old, most often they end up having equity in that boat that counts as a down payment towards the next one. While we're talking about trade-ins, trading in your current boat, if you have one, can further reduce the loan amount, not just because of the equity that you end up having going towards the boat that acts like a down payment. You can also have a sales tax savings that can end up bringing down that payment potentially significantly, depending on the value of the boat that you're trading in. This can make a big difference on whether you qualify and how attractive the final terms are to you. Next up, let's talk about 2025, how that market looks and what interest rates and trends are looking like for this year. Now, if you're watching this video, this is shot in the beginning of 2025, and we want to talk about current market conditions and what that looks like for boat financing. So there's a few big dynamics that are at play right this second. Number one is that banks are actually getting really aggressive right now. So despite interest rates rising over the past few years, banks are being really competitive, particularly with boat loans. The reason why is because they're looking to diversify their investment portfolios, and they find that boat loans are typically really paid quite well. They return really well. They don't write down almost any of the loans that they extend out. And so they're willing to extend those portfolios at a pretty heavily discounted rate compared to a lot of the other different loans that they're doing. So what this means is that right now, at the beginning of 2025, boat loan rates are closer to mortgage rates and closer to the Fed fund rate than any time that I can remember. So I mentioned the Fed funds rate, and while the federal rates have moved around a fair bit in the last few months, both up previously earlier on in 2024 and then coming back down a bit towards the end of 2024, the rates on boat loans didn't skyrocket up a whole bunch, but they also haven't drastically ratcheted down. Now, when we're talking about rates, they're still higher than they were 4 or 5 years ago, but they're not nearly as high as many people may assume right now, particularly in regards to how they compare against mortgage rates. So the reason for that, boat loans also typically tend to be a lot more stable than mortgage rates. They don't adjust on an up and down on a daily basis or even a weekly basis for the most part. They typically have a lot of the forecasts from the Federal Reserve baked into their projections and baked into the rates that they're doing. Many lenders have already factored in the Federal Reserve's projections for the next few months, and so we may see like a 1/4 of a point dip later on this year, depending on what the Fed does. But for right now, most forecasts suggest that boat loan rates will remain stable and quite frankly have been stable the last number of months. Since the Fed started dropping interest rates in 2024, boat rates came down a bit, and they actually came down pretty aggressively, and then they've remained flat through the fall and in through the winter going into 2025 because they have those Fed projections and they have the Fed's actions already baked into those numbers. Where it's looking like the Fed is going to ease the pace of reducing interest rates, we expect that interest rates on boats are probably going to remain pretty stable for the near future. If you want more information on this, we did a deeper dive into market conditions and how they affect boat purchasing, and you can check out our previous video that we did on the topic of what it looks like in buying a boat in 2025. Here at Boardco, we pride ourselves on giving people the best possible financing options. Now, we're a larger dealership, which means we have relationships with lots of financial institutions, and we have fully dedicated business managers that their entire job is just helping customers to get the very best rates and terms and structure things so that their finances are in line, so that they're in the best condition to get a boat. That's not necessarily the case at all dealerships, but if you have guys that are on your side trying to help you and help you get the very best possible solution, it's going to help make sure that your experience is just way better. So let's talk about what we do specifically here. First thing is that we submit credit applications to multiple banks. And when I say multiple, I'm not talking about 1 or 2. We typically send your credit application to around 20 different financial institutions. Now, the reason we do this is because each bank has its own specialties and niches, and we leverage those to your advantage. Some banks will specialize in different situations regarding credit scores, regarding loan to value ratios, regarding amounts that you're putting down, etc. Some banks will also give you different treatment depending on your relationships with them and your exact financial situation. Now, sometimes people are worried about this, going, hey, you're going to ding my credit a whole bunch. That's not how it works. You get one credit ding and you get to have about 20 different banks competing for your business and bidding to give you the best rates and terms. Now, when we're talking about this, we're not just talking about interest rates that the banks are competing on. We know that everyone wants the lowest rates, but sometimes some of the term structures can be more important. Things such as payment requirements, length of loan, at down payment, all kinds of other different factors. The key is that we work to try and strike the best overall balance depending on what you're looking for. Sometimes that may be the very best rate, but we also may have another option that may be a slightly higher rate, but will be way better terms for your particular situation, depending on what that looks like. Also important to note that some banks give better deals on new boats, some better on used boats, some require lower cash down, others work with people that have different credit ratings. By casting a really wide net, we ensure that you're matched with a lender that best aligns with your exact unique situation. Overall, boat financing doesn't have to be mysterious or intimidating. Here's a quick recap of the main points that we talked about. First off, loan terms. They can stretch up to 20 years, especially for newer wake boats, particularly thanks to the lower depreciation that they experience. Number 2 is interest rates are typically a little bit higher than car loans, but they remain really competitive into 2025 due to market conditions and the bank's desire to diversify their portfolios. Third, qualifying depends on credit score, debt to income ratio, credit history, and loan to value. So be mindful of all these factors if you're applying for a boat loan. Fourth, new versus used boats. New boats often have better rates and a more straightforward valuation, which can sometimes make your monthly payment the same or potentially even lower than many other used boats. 10 to 20% down and possible trade-ins can help you avoid being underwater and keep the payment in line with depreciation moving forward. What does this all mean? What it means is that given the current economic forecast and competition among different banks, right now can actually be a really excellent time to finance a boat. Rates are stable, banks are motivated to earn your business, and the rates are shockingly good. If you've been thinking about making the leap, this might be a great time, particularly if you pair this information with what we talked about in the forecast for the 2025 boat market. Obviously, the things we're talking about here can vary depending on what boat you're looking at and depending on what's going on. With that being said, there's going to be differences between different boats, and depending on what boat you're looking at and what brand specifically that boat is, it may impact what you should experience when it comes to the loans that you'll get, the depreciation you can expect, because not all brands are equal, which is the thing that we covered in our 2025 market recap. Then we looked at specific boats and what you can expect in the boat market for 2025. That being said, that's it for our deep dive into boat financing for this year. If you have questions about anything regarding boat financing, or if you want to talk to our business managers to go through and give you details about boat financing and how to get the very best rates and terms, even if you're not necessarily buying a boat from us at Boardco, we are happy to help you and give you the information that can help you to just have a great experience on the water and get the right kind of boat, because we want you to be out there having fun. Don't hesitate to reach out to us, and we are more than happy to help you out. If you have any questions at all regarding boat financing or anything surrounding the boat financial topic, go ahead and drop a comment in this video's YouTube page, and we're going to be more than happy to address it in a future video. So if you find this video helpful, don't forget to like it, subscribe, and all that fun stuff, and check out boardco.com for more information. Thank you very much for spending time with us. We'll see you later.